needs to just restart his computer. He's having a bit of technical difficulties with his camera. So he's going to just try to restart it just to then see if it will allow him to come in. He's coming back. His audio is connecting, and see if the video then connects afterwards. Welcome everyone to joining. Just give a few minutes for Edwin to join. It's still got a minute before we meant to start anyway. Edwin's screen, so everything's working again.
Do you want to start straight away, or you want to wait a bit?
Let's give a bit of time for people to join.
Okay, so welcome everyone who's joined so far. We're just waiting for Edwin to set up and be happy, and then the others are coming in. So just give it a few minutes, and then we'll start. So make yourself a cup of coffee or whatever you're going to have, and we'll join you in a few minutes.
So I'm ready. Unfortunately, my camera is not working today. I don't understand why, but I'm ready to start the presentation when everybody's in. Thanks.
Okay, yeah, we're still a lot of people still waiting. We're still waiting on a lot of people to log in. So yeah, let's give it a few more minutes. We'll give it.
I think we'll start at 5 past.
Yeah, hopefully people have joined in by then, and those who haven't there will be a catch up. All right.
Yes. Maybe while everybody's waiting, if they can just those that have joined, if they can just scan that QR code with their camera, and it should take you to a link. That's a totally anonymous question. I don't know who's saying what, but please keep the answers clean. And if you just respond there, it's just something for you to do in the meantime. And then, I do this actually when I present internationally, and then we ask in which city you are. But since it's a local thing, it would be interesting to know where everybody's watching from. So thanks. I'm going to just step away for 2 minutes. I'll be back shortly.
I mean, they just type that link in the chat if everyone's struggling to open it, and see maybe if you need to try it that way. Oh, no.
Okay, so for all those who just joined, we are waiting on the last few to join. They are coming in. And then we'll start in about 2 minutes at 5 past. Anyone who's not there will be able to join us or get the catch up later. There will be a recording which will be circulated after the meeting, after the session, I should say. And we'll start as soon as the clock strikes 13:05.
Thanks, Dan. For those of you that have just joined, if I can ask you to just scan the QR code.
Yes, so there's a QR code. It's also, the link is also in the chat. If you want to have a look there quickly, there's a link in the chat. If you go on there and answer the question, just before we start, and we'll be starting in a few minutes, in a few seconds. Actually, we're going to start now. So welcome, everyone. Thank you, Edwin, for joining us and for presenting today. It's about the vexing subject of ethics and non-compliance for professional accountants. And Edwin is the CEO of SARE Consulting, specializing in, amongst other things, ethics. So without further ado, and on this pleasant wintry afternoon, just welcome to everybody again. And Edwin, the floor is yours. Edwin is having trouble with his camera, so you won't see him, but you'll be able to see the slides.
Right.
Sorry, one other question, Edwin. Will you be stopping at about halfway for a body break or tea break?
So what I'd like to do, if it's okay, is after an hour, stop for literally a 5-minute leg stretch. And then after 5 minutes, we continue. And then we can do, what do you think, a 10-15-minute tea break at about, what we going till 4 o'clock, is that right?
Yes, yes.
So then then after 2 hours, we'll stop for about a 10-15 minutes, depending on how far we are in the process, the slides, the presentation, if that's okay.
That's fine. Okay, so everybody got that? 5-minute break at 2 o'clock, 10 to 15 minute break at 3 o'clock. So that's pretty much the afternoon. And Edwin, as I say, the floor is now yours.
Great. Thanks, and afternoon again, everybody. Stan posted in the chat a link to this QR code. It's what you see on the screen there, the polev.com W-Consulting 518. You can either put that into your phone and or onto a computer, and then it'll take you to a question that is being asked, and I'm going to use that to engage with you. The advantage of using this technology is it is totally anonymous. I can just, the only information I get is how many responses there are and what those responses are. Who said what? I have no idea. And the first question I'm asking is, in which suburb do you reside? And the reason for that is to see that the app's working, to see that you know how to engage with me. At the moment, I only have 8 responses, and last time I checked, there are 29 of you. So if you take 30 now, if you take Stan, myself, and Danny off, that means there's 27 of you, and only 8 of you have responded. So therefore, it's going to be difficult interacting. I see that number going up. So if I can just ask you to please scan that QR code. All you need to do is open your camera. Your camera should then focus on that QR code. It will then open up another website, and whatever question I display should then appear on your screen, on whatever device you're using. I see there is a typo as I was changing that. I've just fixed that typo as well. So in which suburb do you reside? If I can just ask you to scan the QR code or put the website address polyv.com/wconsulting518 in your browser. Is that working, everybody? Are you having problems? If you are, please post something in the chat or let me know what's happening. But so far, 9 people have been able to do it. Okay, that number ticking up slightly. Just because we do have other questions, and that's why it's important we get this right, so that I know that maybe I'm not explaining something. I can just ask a quick question. You respond anonymously, and then we can discuss those responses. So I'll just give you another minute or so. Come on, guys, we're almost halfway there. I've got 13 responses so far. Let's try and get at least over half of you responding, please. If somebody's saying that they're not having luck on their phone, so you can also type it in on a computer, and just on the computer that you're watching, just go out of the screen for a sec, respond, put that QR code in. Put the that website address that's Dan posted in the chat, polyv.com/wconsulting518. It's in the chat there, and then that'll work as well. Okay, just waiting a short while. Let's try and see if we can get a few more people just to respond. Thank you. Right, so let me show you now what the responses show. And what's interesting about this is a word cloud. So for those of you that have responded, thanks very much. The more people answer the same, the greater, the bigger the word appears. So it seems like most people are from Johannesburg and Cape Town. We've got some people saying they're from London, from Mpumalanga, Melbourne, Germiston, Alberton, Centurion. I assume that's van Riebeekshof, Fairvale, etc., Sydenham, Stanton. So that's where you're telling me you're from. And what we're going to be doing is we're going to be utilizing this in order for me to ask you questions during the course of today. So thanks very much to everybody who's responded. I'm just going to share the slides. If we can just have a thumbs up, can you see the slides again now? Can everybody see the slides? Is that appearing now? I'm now loading the agenda. Is that working?
Yeah, the agenda is showing now.
Right. Okay. Thank you. Right. So then let's get on with the training today. So what we're going to be looking at is who writes the code of ethics. what are the findings from regulators in relation to this code, and in particularly around NONCLAR, non-compliant with laws and regulations? And why is that important is because if this is what regulators are worrying about, this is when we as practitioners are experiencing our challenges, and therefore we need to make sure that we focus on that. We'll look at some changes to the code, what's changed in the Code of Professional Conduct last year that you need to be aware of. We'll then spend some time on the role and mindset expected of a professional accountant. We'll then look at the fundamental principles that are expressed in the code, how we need to behave, and then we'll focus on NONCLAR, non-compliance with laws and regulations, and then we'll touch on some fee-related provisions and some non-assurance services, and then, depending on time, we'll look at some case studies. So, we've already done this one, so let's then... and here's the next question for you. And if you can just respond, I just need to activate this new question, so if you give me a moment. What I'm looking for a response from you on is when somebody says ethics, what word do you immediately think of? So give me a sec. That should be active on your device now. So if you can just respond. I forgot to mention, if you keep your phone open on this page, whenever I change the question that I'm looking for an answer, it'll change on your phone automatically. You don't need to do anything. So don't close it, but there's the QR code in case you do. So I'm just waiting for you to respond on that. Sorry, I see I'm displaying the wrong question. I've just realized. Give me one moment. Sorry, just give me one moment. I'm just going into the correct document. Give me one moment. It will be up there shortly. I'm just waiting for it to open up. Right, there we go. Now, apologies, now it will be there. When someone says the word ethics, what do you think of immediately? Okay, I've got 5 responses so far. So just waiting for a few more to come through. But while you guys are voting, what I'm going to do is, sorry, apologies for that, is, you know, we understand that when it comes to ethics, we all have a different view. We have a different touch point as to what does ethics mean to me. And that's influenced by numerous factors, such as your upbringing, your religious background, your social background. As somebody has already responded, your morals. So let me show you what the responses so far have said. when somebody says ethics, this is what you have responded. Integrity coming through as the highest. Interesting one there. Panic, laws, morals, regulations, fraud. And because we all resonate with ethics in a different way, that's why we need a code to try and take our own morals, which have an impact on ethics, to define and standardize the approach and the way in which we should behave in a professional manner. So, thanks again to those of you who did respond. It's always good to know there's somebody out there in cyberspace. So let's then have a look now at when we say ethics, and some of you responded morals. So the difference between morals is morals are personal qualities, personal ways in which we interact with other people. And based on our morals, for example, we may have a different response to integrity. Let's take a simple thing like stealing. I think everybody agrees stealing is wrong. But depending on your moral compass, there may be circumstances where stealing is allowed. For example, stealing a pen from the office. Or, I don't know, you go to the, you go on holiday and then there's the, all those different shampoos and conditioners and shower caps that you get in the room. And people say, well, that's there. Somebody with a higher moral compass would say, well, that's for me to use when I'm there. Somebody else will say, well, I've paid for it, therefore it's mine, and therefore they'll take it with them. I'm not saying what's right or wrong. All I'm saying is that our morals directly impact our ethics on something as simple as integrity. So that's why it's important to have a code. And when we look at the code, the IFAC code is set by an organization called the IESBA, which is the International Ethics Standards Board for Accountants. They are part of IFAC, and interestingly, SICA, for example, have adopted the code, the SICA Code of Professional Conduct. The URBA Code, the SICA Code of Ethics or the URBA Code of Professional Conduct is based on this very same code that has been developed internationally, that all member firms, member bodies adopt. And SICA is a member body. SIPA, the South African Institute of Professional Accountants, also adopts the IFAC code. So let's then understand, because most of you are in business, not necessarily in assurance. That's why what we're doing is we'll be looking at the IFAC code in terms of professional conduct for accountants in business. So the code is made up of 4 parts. The first part deals with the fundamental principles, the compliance framework, and what they call the conceptual framework. We'll be acting on that. And then we will focus on professional accountants in business, which is part 2 of the code. In part 3 and 4, those of you that have an auditing firm, and the additional and offer assurance. So that's where the independent standards are in part 4. But for today's presentation, we're going to be focusing in on parts 1 and 2. So let's first ask another question to you. Is independence applicable to professional accountants in business? And if you give me a moment, I'm going to load this question for you. I'm just waiting for it to load. Give me one moment. Give me one moment. Maybe just to save time, if we can just ask you to put in the chat, yes or no. Is independence applicable to professional accountants in business? What are your thoughts, yes or no? I'm going to ask you to just put your response in the chat, please. Okay, I've got some people responding there, thank you. I have been able to load it. So 3 people responding yes. If you can just respond on the chat now, so in the QR code, it should be active now. But I'm going to show you what I'm seeing. Some people saying no. Some people being honest and saying unsure. And so far, 76% of you, almost 3/4 of you who have responded are saying yes. So most of you saying yes, and just going to have a look at the chat again because there's a lot coming through. Yeah, most of you saying yes on the chat as well. So thanks for putting those responses while I was getting it going. So what's interesting is if I go back a slide, is if you look at the slide here, the International Independence Standards Part 4 are only actually applicable to assurance providers. So that's if you do an independent review or you do an audit. But there is something in Part 1 of the code that says, well, there's a fundamental principle of integrity, and that's applicable to all professional accountants. So for those of you that said unsure, you were right, because, well, are we in Part 1 or Part 4? For those of you that said, no, it's not applicable, well, you're right, because Part 4 is only applicable to assurance providers, so people that do audits. But Part 1, which we're going to be addressing now, deals with independence from the perspective of 2 kinds: independence in appearance and independence in mind. And what that means is that to try and give you an understanding of the difference, let's say I was an auditor and I had a relative who carried on she was a lawyer, and she carried out, she ran a practice, and she did I had to audit her trust account. Now, I could do as much work as I want and make sure, well, this is a relative of mine, and make sure that whatever the standards required to do the audit of a trust account is carried out. And therefore, I could show that I am independent in mind. But I think you would all agree with me that anybody looking from the outside will say, well, your aunt, you may be sort of covering things up. From an appearance point of view, there's no way I could satisfy those requirements. And therefore, what we're seeing, therefore, is that when it comes to the fundamental principles in the code, well, I have a responsibility so that when somebody else looks at how I behave, they need to see whether or not, if it could appear that I'm not independent, I have a problem with the code. I may not be compliant. I hope that makes sense. Whereas when it comes to specific requirements around it, well, there, I don't care if you appear independent or not. I don't care if you're independent in mind. There are certain rules and additional responsibilities that a person has. Okay, so let's then move on. In terms of the code, so the code is broken down into two different types of information that are recorded. There's something which is a requirement, which is prefaced with the letter R. R 100.1 would deal with something that I would have to comply with no matter who I am. And then 101.1.3 AP would be something which expands on the requirement for people to understand what they need to do. So, before we go into the overall picture, let's just have a look at what's changed last year. And the first thing that I need to alert you to is in part one, probably the most significant change is that there is now an expectation and a requirement that this code focuses on the role and mindset expected of registered professional accountants. And that's been effective since 31 December last year. And what that does is it places upon one the additional responsibilities and requirements that you look back at something, that you introspect, you apply your mind. The next change to the code was with the signing conventions, and that is that if you sign off a report, you need to sign it off in terms of the professional body to which you relate, to which you belong. So if you're a CIPA member, you should be quoting your CIPA membership number. If you're a CICA member, the same. If you're signing off information as a tax practitioner, it would be good to include your tax practitioner number. And that's something that's been effective since 15 December 2021. These changes on the slide here relate to auditors. And I thought for those of you that are just to show you that there have been, if you'd use external quality reviewers, if you have fee dependencies, or you provide non-assurance services, be alert that there's changes that kicked in 2022, so they were effective for the first time last year. So let's now, we spoke about the biggest change being this role and mindset expected of registered or professional accountants. And let's then understand what exactly does that mean. So when we look at the mindset and role of an accountant, gone are the days when one can say, well, I'm here in the profession to make money, and never mind the laws and regulations. I need to make sure that the requirements now state that one needs to look at the confidence in the profession. And we know the accounting profession worldwide has been through a huge reputational challenge in the past number of years. And then when you look at what's happened in South Africa, with the collapse of Steinhoff, with, what was that bank where all the municipalities invested in? Something with a V, I just can't think of it. There was an auditing firm that collapsed not so long ago. We know the whole KPMG scandal, the Guptas. So there's a need now worldwide to restore confidence in the profession. And the code sets out high quality standards of ethical behavior expected of professional accountants, with the objective to promote confidence in the profession, which is why businesses, governments, and organizations involve professional accountants in a broad range of areas, including assurance and the services that you provide: tax, consulting, bookkeeping, financial statement preparation. All of these professions, all of these services should be enhanced, and people have a trust in the work that you do because we have a code that we need to adhere to. And registered accountants acknowledge that such confidence is based on the skills and the values that we bring to professional activities that we undertake. So, what does it mean to comply with the code, and what is our responsibilities in terms of this new role that we play and the mindset that we need to adopt? And that is that we need to reinforce the aspects of the principles of integrity, objectivity, and professional behavior. Linked to that is raising the behavioral expectations for all professional accountants through requiring them to have an inquiring mind as they undertake their professional activities. And there needs to be a focus and emphasis on the importance of being aware of potential influence of potential influences of bias in the exercise of your judgments or decisions in the professional services that you offer, and then making sure that there is a supportive role and the promotion of an ethical culture in the organization that you work or the services that you provide to your clients. And therefore, one of our responsibilities now is to make sure that, well, if I have a responsibility to be aware of influence of bias, to make sure that I am exercising an inquiring mind, well, therefore, the implication is I can't accept things at face value. If somebody says, here's my tax return, here's my income, and with your knowledge of the client, you know those numbers are not correct, well, on what basis would you be allowed to submit them? If you're preparing a set of financial statements and you know that there's certain information that's left out, the compilation of a set of financial statements, the code applies to all services that you provide. Make sense? So when it comes to this role and mindset, we need to act in the public interest. And we need to have an inquiring mind, which is not something the same as professional skepticism, which is a term used in the auditing profession, but that means being alert for information and asking the right questions. You know, if you ask a person, is this your total income? There's a response you'll get. But if you'll ask the question, you know, has the income from your, I don't know, flea market revenue been included in here? That's a different question. And that's likely to get a different response. So one needs to also be alert for unusual or exceptional circumstances where compliance with a code might not result in the public interest or lead to a disproportionate outcome. And I always say, if you're facing these sort of decisions, these are not decisions you should be making on your own. Also to consider is the importance of being aware of one's own biases. You know, if you're looking to achieve something, you want a particular result, you may be inclined to overlook certain things. I'll give you an example that happened to me. I was an expert witness in a forensic matter, acting for a firm of accountants to protect, so in an arbitration matter, sorry, this wasn't a forensic, this was an arbitration matter where one party was suing another party, whereby the auditor did a valuation of the shares, did a net asset value calculation of the entity, because that's what he was asked to do, and that's what he was mandated to do in his engagement letter and in the shareholders' agreement. Now, the question is, well, was that allowed or not? And, you know, you can always try and answer it if you're told to try and justify something. But if you look at the code, well, in appearance, how can you be objective if you're going to be acting for one shareholder in the future and not another in a buy and sell, if that makes sense? So in terms of this role and mindset, we have a responsibility to ensure integrity from ourselves, but also ensuring that there's ethical behavior in the organizations in which we work and the clients with whom we engage. So moving on, another question for you. How familiar are you with the Code of Ethics and the conceptual framework contained therein? I'm going to load this question for you. It should be up any second, so if you can just respond on that. the multiple choice answer, you've just got to select. So while you're doing that, I'm just checking if it's working on my phone as well. Yeah. So I'm just going to wait for you to respond to that. How familiar are you with the Code of Ethics and the conceptual framework contained therein? Just waiting for the responses to come through. Okay, so just going to give you another couple of seconds to respond. So those are the responses. I'm not sure if you can see it. I've actually put it on the phone, but I think it works better if I give me a sec. I'm not going to present it. I'm just going to show you what those responses are. So thanks to those of you who have voted. So 75% of you are saying you know the code and the framework, but are not that familiar with the detail and would enjoy some technical information. Some of you were saying you know it very well, and some of you don't know the technical details at all. Let's then get into some of the detail. So the first aspect is the conceptual framework deals with 5 fundamental principles. And those are the ones in blue that you can see at the moment: professional competence and due care, integrity, objectivity, confidentiality, and professional behavior. And then, as we said before, independence is something that is overarching, that needs to be applied across all circumstances in which you engage. Let's then understand these in a bit more detail so that we then have a clearer understanding of how we need to behave. And then we'll link that to non-compliance with laws and regulations towards the last session this afternoon. So when it comes to integrity, so the definition of integrity, honesty, which some of you said that's the first thing you think about when you think of ethics, has been changed in that it now says that integrity is the fair dealing and truthfulness and strength of character to act appropriately even when facing pressure to do otherwise, or when doing so might create potential adverse personal or organizational consequences. Take a moment to integrate that. What we're saying is that we have a responsibility to act in the public interest. We have a responsibility even when there could be negative consequences. And that could be financial, social, political. I'll give you a situation that happened to a client. He was in a meeting with a managing director and said that, look, I'm sorry, there's certain problems I have. I need to qualify your financial statements. And the person said, look, I'm sure you can do something. And the person said, look, not really, my hands are tied. So the person said, look, think about it. Anyway, he then got an invitation to the audit committee. And the audit committee invited him. And the audit he was doing was one of the state-owned companies. And included in that meeting was a minister of our government who oversees that portfolio. And once again, the question was now put to this person in the audit committee to say that, look, there's no ways that he can go along the lines that he's proposing and qualify the audit report. It would have disastrous implications for this entity. And the person said, but you don't understand. My auditing standards say this is what I have to do. My code of ethics says this is what I have to do. Those two are aligned. There's nothing I can do. The minister who was then attending this audit committee said, can you please call security to remove this person from being uncooperative in the meeting? The next day, this person walks into his office. And because this was the biggest client of the firm, they say to him, can you please sign your resignation letter in front of you, which you'll be submitting to us? That's somebody that was uncompromising in terms of their ethics and was put out of a job. That's sometimes the consequences of acting in a corrupt society and standing your moral ground. And I said to that person, you know, as difficult as it is that you are in this position, at least you can sleep easy at night. And now I'm glad to say this person is now the heading up the audit division of another practice where things are being done appropriately. But yeah, went through a very difficult time. So I think this story demonstrates how one needs to stand one's ground when confronted with dilemmas and difficult situations, and challenging others and avoiding being influenced by people that may have unethical agendas. But when it comes to objectivity, so this is the second pillar of ethics, and there one needs to exercise one's business judgment without bias, without conflict, and without undue influence. And I think it's the bias that I want to focus on, because the undue influence is sometimes quite apparent. The conflict of interest, maybe not as easy to see, but the bias is something that can be very subtle. And that, you know, if you go into a client with a specific objective, and that can be to submit the return as quickly as possible, to charge, to get your fees paid, to make a profit, to ensure that this is efficient, well, you may be biased against being objective. And therefore, what the role and mindset is saying, well, be cautious, inquire, and make sure you exercise objectivity appropriately. In terms of professional competence and due care, so there one needs to make sure that one's up to date. If you're doing tax services, well, know what's happening. If you're consulting to non-profit organizations to, I forget the Companies Act one, these charitable institutions, well, there's new requirements, and Section 18A submissions that need to take place. You need to be on top of that. One needs to act diligently and in accordance with the applicable technical and professional standards. If you produce financial statements, you prepare financial statements, there is a standard ISRS 4410, which has been issued, which guides and sets out the procedures and policies and processes that need to be followed when preparing a set of financial statements. And then those working in a professional capacity under an accountant's authority need to make sure that they're kept up to date. If you have staff, they need to be kept up to date, so that ultimately you have the skills, and then so do your staff, in order to deliver the services that you provide. Professional competence and due care is expanded because there's now technology-related developments. You know, if you're preparing, I remember when I did my articles, we used to have to draft a set of financial statements manually without the use of technology. Now we're using technology. Do we know how to use that technology? The same could be said for drafting of financial statements, for the technical input. If you're using a specific framework, do we understand the differences in those frameworks? Taxation. Do you understand what's required, what's changed? Are you kept up to date? Do you know how to use the software, etc.? And then there may be new standards, new material. For example, if you're in audit, there's a new standard on risk assessment. The next aspect of the framework of the code that I'd like to discuss is confidentiality. And there, a registered accountant needs to comply with the principles of confidentiality to respect confidential information acquired as a result of their relationships with a client. And that needs to be extended across the social environment. Just because I found out something doesn't allow me to communicate that information to anybody else. Furthermore, there's a need to maintain confidentiality of information within a firm. So just because you find out certain information about one of your clients, and you may work with a group of other people, doesn't allow you to discuss that information with others. I mean, there was a scandal with the board exam by SICA a number of years ago, where the board exam one year was on a specific industry. It was in the healthcare industry, if I'm not mistaken, and there was an audit clerk who had worked on a particular engagement at the auditing firm, and they shared that with other staff that hadn't had that experience. And then what happened is that was shared with other people that weren't even part of the firm. And there was a huge scandal, well, not a scandal, a huge investigation that took place. And some of the people were actually barred from actually ever becoming CAs because they breached the code. It's also important to maintain that confidentiality with prospective clients. So you may have information that you've acquired, but you can't share that with a prospective client. Obviously, the knowledge you can share, but something that's confidential as to how somebody does something that is where the line would be drawn. And then also, the last point says using information for personal advantage or for that of a third party to be disclosed. The middle one is, or the second last one is where NONCLAR comes in, and that is that outside the firm, you can't share anything unless there's specific authority or there's a legal or professional duty or right to disclose. And this is just that same information represented differently. But what I want to focus on is that confidentiality can be overridden where there is a legal right or an ethical responsibility. And that's where NONCLAR, non-compliance with laws and regulations, comes in. So let's then look at the last aspect of the fundamental principles, and that is the professional behavior. And once again, that has been revised in terms of the new code last year, which says that now a professional accountant needs to comply with the principles of professional behavior, which requires a person to comply with laws and regulations and behave in a manner which is consistent with a profession's responsibility to act in the public interest in all the professional activities and relationships that one conducts, and then also to avoid any conflict that you know about or could or should know about that could discredit the profession. That's quite an onerous responsibility. And remember, this applies in all your professional activities, that you act in a way which wouldn't bring the profession into disrepute. So when it comes to the conceptual framework itself, there have been no changes to how one needs to exercise professional judgment. And I'm emphasizing that, that's why you've got it twice. And the same with something that's been in the code for a while, the use of the reasonable and informed third-party test. What has changed, as we touched on before, is that requirement to have an inquiring mind. So what does it mean to have an inquiring mind? Previously, it was that one needed to be alert for new information and circumstances and applying material or information when considering the source relevance and the sufficiency of that information. New information, being aware whether or not new information has emerged or there have been changes in the facts and circumstances. Now we have a requirement that when identifying and evaluating and addressing threats to the fundamental principles, we need to be continually alert for whether or not this information may not be credible. This is a prerequisite for applying the conceptual framework, applying those principles of objectivity, integrity, bias, etc., making sure that when professional accountants exercise their responsibilities, they include a level of professional skepticism, which is to evaluate the evidence, the information which they have received. These considerations include, but are not limited to, looking at the relevance, sufficiency, and reliability of information. whether or not the information or its source might be influenced by bias or self-interest. Maybe you're dealing with a professional accountant that's got a specific agenda to reduce taxes. We need to be alert for this. Is there any information that might be missing? You know the person's got a property which is rented out and the guy comes every month to deposit cash, to give him cash. Is there inconsistency between the facts and known circumstances and the accountant's expectations? You know that the entity is doing well, but the numbers are showing a reduction. The guy's just bought himself a new fancy car, but he's showing losses. The information provides a reasonable basis to reach a conclusion. Is the information that you're getting, does it support the work that you're performing? Is it supported by the evidence that you've been, the documentation that you've been given? There might be other reasonable conclusions or explanations or alternatives that should be applied as opposed to what is being proposed by the client. I was in a consultation with a client where it was an interesting one. That they were dealing with a client and they weren't happy with the ethics of the client. Let's just say I see it has gone. Yeah, I'll just finish with this story and then we'll break for that 5-minute leg stretch. So there was a client that he wasn't happy with his client, and he said, look, he spent some time, he may as well just finish the services he's doing, and then he's going to resign from them and tell them to go and find another accountant. And I said to the person, but I don't understand the question. Surely, if you know that there should be other, that information is missing, that the person's not being honest, why do you want to continue now? Surely you should be resigning now from the client. And, we sometimes have a bias or self-interest because, well, I've done so much work, I've invested in it, well, I can't walk away. And it's interesting, I know another client where they walked away and the accountant that took on the services after them didn't pick up the problems, even though they were informed of it, that there were certain issues. And they had some serious dealings that they had to face, and consequences with the professional body with whom they belong to. So I think that brings us to an appropriate time to stop for literally a 5-minute leg stretch. We are going to be having a longer tea break later, that's after 2 hours. So just to give yourselves an opportunity to refresh. I make it just gone 8 after the hour, so please at 13 past the hour, we'll be continuing. Thanks, see you just now. Right, we'll be starting in a minute, and then we'll be going for another hour. So can I just have from a show of hands, if you can just raise your hands, I know if you're back.
Yes, I'm back.
Okay, I've just got people indicating they're back. It has been 5 minutes. I'm just going to wait another minute or two. Thanks. You can lower your hands. Thanks, Yusuf Ferdi, and those of you that one time. I'm going to just give people another minute, but then I'm going to start. So I don't know if there's any questions for those of you that are back. In the meantime, you're welcome to ask or. Great. I see a few more hands going up and down, so that's great. Okay. So right. So let's then continue with the session. So in terms of then part of ethical behavior is exercising professional judgment. And that has now been defined as the application of relevant training, experience, knowledge, and skills that are comparable with the facts and circumstances of the engagement that you're dealing with in such a way that you take into account the type of work that you're going to be providing, this level of professional services, and the interests and relationships involved in the activity that you are presently engaged. So when it then comes to the application thereof, and what the code says is that in terms of your professional behavior, you need to apply the conceptual framework, what we've been discussing, that independence, integrity, objectivity, in the exercise of making informed decisions for the services that you provide. You need to also look at the different courses of actions available. Are there alternatives? Is this the only way to do something? And then also determine whether such decisions that are being proposed by your client or yourself are appropriate in the circumstances. These considerations would need to extend to the knowledge that you have on the topic, the experience in the industry or in the matter with which you're dealing, and then evaluating whether or not it is appropriate to reach a conclusion that you're proposing, that the service that you're offering. One also needs to consider when one needs to consult with other experts or professional accountants who may have more or different experience to yourself, because if we don't do that, then we wouldn't actually be exercising our professional judgment properly. And then when it comes to professional judgment, one needs to make sure that one's own preconceptions or biases, one needs to first of all be aware of them and then ensure that one is not being steered in a particular direction or to a particular solution because of the what's the word, the bias that one has, one's own preconceived ideas. When it comes to an inquiring mind and applying that to professional judgment, we need to have an understanding of the facts and circumstances, and we need to evaluate that to determine whether or not the source from which it's coming from may not be correct, appropriate, whether or not the information is relevant to the service that I'm providing. You know, an example would be, let's say you're preparing a set of financial statements, you know, and the person's giving you information as to how they have, you know, the types of products they sell or the types of activities they're involved in. And, you know, is that relevant? Is it sufficient? Are they telling you all the types of services? Has that all been reflected in the accounts? If you're doing a set of management accounts for the entity, is that set out in sufficient detail? Has the underlying information been reconciled? These sort of matters. On a tax matter, you know, is there any information that could be missing from a person's tax return? And this would all be taken into account in the type of work you're going to do, how much work you're going to be doing, and what you're expected to produce. And then being alert for the need for further investigation or other actions that may be required. So when identifying and evaluating and addressing threats to the fundamental principles, there is a need that one needs to make sure that one applies professional judgment regardless of the activity undertaken and incorporates professional skepticism with a critical evaluation of the information or documentation that is being presented to one. Does that make sense? Are there any questions? Right. So how then do we apply that critical assessment, that inquiring mind? So the first aspect is we need to include where we've got new information. Does that new information make sense? Is there other information that may be relevant that hasn't been disclosed? Are there any changes to the facts or circumstances? Or if there aren't, should there be changes based on our knowledge? Is the person providing us with that information biased? Do they have a self-interest threat? Are they particularly looking to reduce taxes in an unlawful way? If you're preparing financials, are they trying to paint a particular picture, despite the fact that there may be information or concerns or liquidity problems which they're trying to hide. Are we aware of any information that contradicts or is inconsistent with what we've been told? I remember I was engaged by a client, and they said that there's certain decisions that have been made that have changed the liquidity of the entity. And I said, that's all well and good, but there's been reports about certain restructures and that they haven't worked. So has that been investigated? And then ultimately, is there a substantial, or sorry, not substantial, is there a reasonable basis? Is there support for the conclusion? Is there support for the work upon which you're engaged? Or are there other reasonable conclusions that should be considered before a final decision or the service that you're providing is concluded? So moving on, we spoke about the reasonable and informed third-party test. This is something that has been in the code now for 2 to 3 years. And what this actually requires is that one needs to, how can I word it? One needs to take a step back so that if somebody considers the actions that one's taken, would they arrive at the same conclusion? Take into account all the facts and circumstances that the person knows about. And this is an interesting one, or should know about. It's all very well saying, yeah, well, I didn't have a responsibility because I didn't know. They didn't tell me this. But what this reasonable and informed third-party test is, well, if you could reasonably have expected to know about that information, well, that's part of your responsibilities. And that would need to be assessed at the time the conclusion was made, which means you're not expected to have a crystal ball, but at the same time, one needs to make sure that you apply that inquiring mind to determine if there's any information which may have been hidden, or there's inconsistent information, and what do you do about that? And that this person who's going to make this informed decision has the relevant knowledge and experience, and they are impartial. So, how then do we apply this in the services that you carry out? So, applying it in the conceptual framework, understanding if you're faced with an ethical dilemma, is that ethical dilemma, the decision you've reached, is that appropriate? Have you considered the alternatives? An example would be the situation of bias. Your client wants a particular amount of tax to be paid. Well, is there evidence to support that amount of tax, take into account your professional knowledge, take into account your integrity, take into account your professional competence, remembering that one needs to make sure that one's acting in a way which will not bring the profession into disrepute. Then the next aspect, which we're going to address in a lot more detail, is the threats. Where one has a threat to one of the fundamental principles. For example, let's say you've done the bookkeeping services for a client. Well, what would you not be allowed to do under those circumstances? We know the Companies Act, for example, says that you can't audit an entity. You also can't prepare financial statements. And then you can't prepare financial statements and audit an entity. So, if, for example, you're doing a review, well, if you prepared the financial statements and you're a one-man show, well, unfortunately, there is no safeguard that you would be able to implement to reduce that threat to an acceptable level, because if you've prepared the financials, you're reviewing it, there's a self-review threat which is not manageable if you're a one-man practice. But for example, you could ask your a colleague in the profession to issue the review report or sign off on it, provided they carry out the work, and you do that for their clients. Or if you're a two-man practice, well, provided one person does the review and somebody else does the compilation, well, that would be an example of an acceptable response. And then on the independence, as I was discussing earlier in that example with if I was an auditor of a trust account of an attorney who's an aunt of mine, the biggest challenge we have is whether or not we can overcome the threat that one appears not to be independent. And that's a very high threshold. So when we look at threats, and now what we're focusing on is the framework to deal with ethical challenges. But before we look at those, how we respond to challenges, how the code recommends, we need to understand what types of threats, ethical threats, can exist in practice. And the first one is a self-interest threat, where you've done something and you're then going to, where you have a financial interest in the outcome. For example, you've invested some time on the client and now you have an ethical challenge. And now, well, if you walk away, you lose all your time and fees that you could have earned. Another self-interest is if you have a fee outstanding and you're going to do more work. Well, that's clearly a self-interest threat. A self-review is where you've done something which is now subject to your own further work. Just trying to think of an example. Yeah, so that would be, say you consulted on a particular accounting transaction, and now you need to do a review over that transaction. Objectivity or advocacy is where you promote a client's position. I remember when I did articles, it was common for an audit client not only to get paid in shares of an entity that they were looking to list, but also to sell those shares and to promote those shares. That is something in terms of the existence of our current code is something that's not allowed. A familiarity threat is being too sympathetic or accepting because of a relationship, a closer relationship. You know, I always say, if somebody's been doing a particular service for a client, be that tax, compilation engagements, consulting work, whatever service that is, that has a risk of dampening your inquiring mind. And then intimidation. I remember I was once called into a partner's office on a review, an external quality review that I was doing. And the person said, you know, I need you to sign the report and you need to date it. What's it, the 30th of April, and today's the 23rd of May. And I said, well, I can't do that because I am still doing the work. And the person had the audit manager of the engagement there to try and further intimidate me. And I walked out of the room, and after explaining to them that I'm unable to assist them in breaching their own ethical duties, and then got on the phone to my boss, and you know, we then drafted them an appropriately worded email to explain that we would not be complicit in their unethical behavior. So let's have a look now at the way in which we respond to threats. We've defined on the previous slide that I've just loaded again what types of ethical threats are the most common that arise. Now let's understand how we approach a threat and deal with a threat. So the conceptual framework specifies an approach for professional accountants to follow. The first is to identify the threats to compliance with the fundamental principles. So in other words, which fundamental principle is being challenged? Then we need to then go through a process whereby we evaluate that threat that we had identified, including a requirement to reevaluate and be on the alert and on the lookout for any potential new threats. And then once we've done that, we then need to have a response to the threat which will satisfy the requirements so that one will not be in breach of the code, and at the same time allow one to have a step back approach that third party evaluation to determine whether or not somebody else would arrive at a similar conclusion and course of action based on the circumstances. So part of the way in which we deal with ethical challenges is, the first is understanding whether or not there is a threat whereby compliance with one of those fundamental principles is being brought into question, or whether the independence principle is being challenged. And then we need to determine, well, is something permitted, in which case you can perform that action? Is something a potential threat, but there are safeguards so that the code says, or there's accepted practice as to what can be done in these circumstances? Or is this something which is totally prohibited by the code, and therefore I need to walk away? And that could relate to, for example, in an audit environment, non-assurance services. It could relate to unethical behavior in the preparation of a set of financial statements, the submission of a tax return, etc. And therefore, we need to make sure that we look at at what the threat is, and how then that threat can be dealt with. Maybe it's a threat, but when we look deeper, it's not a breach, in which case it may be permitted. Other times, there may be a familiarity threat or self-interest threat, and maybe that can be mitigated by a safeguard. You can get somebody else to do some of the work or have additional oversight, or it may be totally outlawed in terms of the code. So the way to address a threat are threefold. Eliminate the threat. So you have let's say you have an interest in an entity, sell the shares. Then you could maybe, if there was a self-interest threat. The third one is there may be times when you can't do anything, and therefore you need to decline or end the professional activity. For example, you've been the auditor for a client, so you've been the reviewer for a client for the past 5 years, and all of a sudden the client's grown significantly, and now they require a statutory audit. Well, if you've done the review services, you've also written up the books of that entity, the financial statements, because you were allowed to. You had somebody else in your practice do that. Now that you're the auditor, well, there's no way you can breach the code or the Companies Act, and therefore you'd have to decline that activity. And the middle one, is I've left for last, is you can only apply a safeguard where safeguard is allowed, and that safeguard will be able to reduce that threat to an acceptable level. So, in the example of, well, you're a one-man practice, you've done a review for an organization, well, you can't draft the financial statements, but a safeguard would be for somebody else to draft it. Then you don't have that familiarity threat, the self-review threat, I should say. I hope that makes sense. Questions before we go on? So I can't see any questions or hands coming up. So let's then continue. So we spoke about NONCLAR and confidentiality. What I'd like to do now is ask you to once again pick up your phones, and if you can respond to me, does NONCLAR, non-compliance with laws and regulations, only apply to intentional acts? Give me a moment, I'll load that question shortly. I'm just trying to get that activated. So NONCLAR applies to, it should be active on your phones now. So if you can just pick up your NONCLAR is non-compliance with laws and regulations, where you have a responsibility to act in terms of the code. Does that apply to intentional acts only or not? That's the question. Is it intentional acts that are performed by your clients? Or would it be broader? So please vote. This is totally anonymous. I don't know who's responding what. Okay, so let's have a look at some of the responses, thanks to those of you that have voted. I see there's a question. Okay, sorry, okay. So what I'm going to do, sorry, let me just, sorry, if I can ask for those of you that have voted, it seems like the voting from the previous time I did not clear. What I'm going to do is I've just cleared that. If you can just please vote again if you did vote. Apologies for that. Thanks. I noticed your comment. So thanks. So just vote again. It's now open. Great. I see they're coming in fast and furious. Danny, I assume you're attending to the questions. I'm not sure what broader means, etc. Just going to wait for a couple of minutes for people to respond. Okay, right. Thanks to those of you who have responded. Haven't got a great response rate, but in the interest of time, let's just have a look at what you have responded. So, NONCLAR applies only to intentional acts. Most of you saying false. And that is the correct answer, because if somebody's done something by mistake or somebody's done it on purpose, it makes no difference. If there's been a non-compliance, we need to apply the principles of the code. What we do is dependent on what the client does. And it's quite different to, for those of you that are auditors, reportable irregularities. So if you are an auditor, you need to follow the NONCLAR requirements as well as the reportable irregularity requirements. But because this is purely for the code for professional accountants, we're saying, most of you getting that answer correct, that NONCLAR applies intentional and unintentional acts. But let's understand that. NONCLAR is an intentional or unintentional act committed by a client or employer, management or those charged with governance, or other individuals working for or under the direction of a client, which is contrary to the prevailing laws and regulations. So this has been in place since July 2017, so almost approaching 7 years. Now, what we're discussing here is where you're employed by somebody or you do certain work. If you are a professional accountant in public practice, which means you offer tax services, you offer, tax services or bookkeeping or financial statement preparation, we'll discuss that a bit later, because you may have a different responsibility. Yeah, I don't know if Ferdy, you've responded something on the question broader on the question and answer. I'm just not sure what that's dealing with. So let's then understand what the non-compliance with laws and regulations are, and then how do we address them. So in terms of the NONCLAR, as we said, it's intentional or unintentional. For a professional accountant in business, it would be either committed by a client or an employer, or by management or those charged with governance, TCWG, or anybody which is under the direction or supervision of a client or employer, which is contrary to prevailing laws and regulations. So here's a question for you. Let's go on before I ask the question. So when we then look at the requirements, I'd like to ask, have any of you ever encountered a NONCLAR? Once again, I'm going to ask you to answer this. Give me a sec, I'm going to load it. The question should be up and running shortly. Right, there it should be displaying for you on your phones. So if you can just respond, have you ever encountered a NONCLAR? Okay, so thanks to those of you who have voted. Not sure why the rest of you are not voting, but for those of you that have, appreciate your interaction. So some people saying they have dealt with one in the past, some people currently dealing with one, and the majority of you, 2/3 of you, saying that you've never had to encounter one, you've never had to deal with one. So let's then, for those of you that have done it, I hope that it went well. For those of you that are in the process of reporting one or dealing with one, this training couldn't be more timely. And for those of you that haven't, I hope you never have to deal with one. Hopefully you're dealing with ethical clients. So let's just then understand to whom NONCLAR applies. And NONCLAR applies, there's two different sets of responsibilities. There's a professional accountant in public practice, and that is a firm that provides professional services to a client, irrespective of the classification, for example, of those services, tax, auditing, or consulting. And then there's a professional accountant in business, which is somebody who's employed in a contractual relationship, and they carry out their professional activities for that employing organization, or they're employed and engaged in an executive capacity, and it makes no difference in what role they perform those services, would then, just give me one moment, they would need to then carry out their responsibilities in whatever industry they practice. So let's then understand what the responsibilities are and how one is expected to behave. Maybe it's worth answering a question, and that would be, in what role do you play? A public practice or professional accountant in business? If I can ask you just in the chat to just put PP or PB. PB is professional accountant in business, and PP is a professional accountant in public practice. That's in terms of somebody doing tax or consulting to a client. Just would be interested to see, and then I just need to, that'll help me gauge and know how much I must focus on each one of these. So we can just put in the chat, type in the chat, PP for public practice, which means you do tax work, auditing work, consulting, or if you're employed by an entity in whatever sector that is, then you can put PB because you're a professional accountant in business. It'll just give me an understanding of the makeup of the room. Just waiting for some responses to come through. And then we'll continue shortly. Okay. I see some people putting it on the Q&A. That's also fine. Thank you. So that's, I see, regular, usually labor, public practice, public practice. I'm just going to wait for a few more people to respond. Okay. Thanks to those of you that have responded, most of you in public practice. Okay. So then what's important is then make sure that we then deal with the responses, because if you're in public practice, you have more onerous responsibilities than if you are in business. And therefore, let's have a look, first of all, at what's scoped in of NONCLAR, and then we'll look at the responsibilities that you have if you're in public practice as well as in business, because that seems to be where the majority of you are actually operating in. So the first thing is, when it comes to NONCLAR, I'm just trying to, when it comes to NONCLAR, we need to understand what sort of non-compliance we need to worry about. And the first thing that we need to worry about is whether or not, if you're in public practice, if something has a material impact on the financial statements, or something is fundamental to the operating aspects of the business, it could affect the entity's ability to continue its business, or there may be an impact on significant penalties. What's scoped out is something that is inconsequential. What do we mean by something that is inconsequential? So, inconsequential is, for example, the person filed their tax return a day late. Something along those lines. Personal conduct, say you're dealing with a client, you're doing the write-up for their books, and one of the directors, I don't know, got a traffic fine. Well, he didn't submit his tax return. It's got nothing to do with your client, if your client's the entity. But maybe other aspects of non-compliance by individuals that may be under the jurisdiction of under the gone blank, can't think of the word, under the direction or supervision of a client. If they're not under the supervision of your client, then it's got nothing to do with your entity. So let's then have a look at what one's responsibilities are and how one then complies with NONCLAR. And now that we've defined what types of NONCLAR we're looking at that could be scoped in, let's look now at what laws and regulations we need to be concerned about. And that would be areas around bribery and corruption, if there's any fraud that's being committed, money laundering, terroristic financing activities, commercial law, and probably an area in which most of you operate, taxation laws. If there's non-compliance with any tax laws, that could be something that one would need to consider. So here's a question for you. Is this NONCLAR or not? This could be you are the financial director, or it could be somebody comes to you and you are the preparer of the financial statements. So answer it in whichever capacity you operate. Give me a moment. I'm going to load that question for you. Okay, that should be active on your phone. Please, for those of you that haven't, scan that QR code with your phone, with your camera. It should take you to the slide, to the question online on your phone. It'll open it up in a web browser. If you're having problems with that, it should work. If you just type what you see there, polyv.com/W Consulting 518 in your browser. So just going to give you an opportunity to respond. Okay, so thanks to those of you who have responded. There we go. It's just changed because we had another vote that just came in. So 70% of you saying yes, 20% of you saying unsure, and 10% of you that have voted saying no, it's not a non-compliance with a law or regulation. So I think we would all agree that the Companies Act, and if you're dealing with an entity that your client that is a company, if they have not prepared their financial statements and they are subject to the Companies Act, that is a law or regulation which they need to comply with. Now let's just go back to that definition. And give me a sec. Scoped in is either material amounts and disclosures in the financial statements or fundamental to the operating aspects of the business, its ability to continue, or to avoid material penalties. Now, when it comes, does anybody know, what is the implications of non-compliance with the Act? My understanding is that even if an entity hasn't submitted the annual return, the entity can be deregistered. So something as insignificant as that can have a material effect on the company, because the Companies Act, the sub-C will deregister them. It'll affect their ability to continue. Another, where the financial statements have not been submitted, not been prepared, well, that's non-compliance with the Companies Act. The implications could be more significant depending on who's relying on those financial statements. But is there non-compliance? For those of you that said yes, which was 70% of you, 13% of you, whoops, no, sorry, what's going on? Not sure what's happened to that question. Give me a moment. Here, 70% of you. There we go. That was the previous one. Sorry. 70% of you have said that is, do you have a NONCLAR responsibility? The answer is yes. And well done. So what would your responsibility be? So it depends on what the client has done. And I think we need to understand what confidentiality means and when is it superseded. I'm just checking the time. So I'm just going to deal with this slide, and then we're going to break this slide and the next one, and then we'll break for that, probably a 10-minute tea break. So normally we have an overriding responsibility of confidentiality, which, as we said at the beginning when we discussed those fundamental principles, that can be breached under certain circumstances, or let's just say it doesn't even apply. And that is where one is required by law to disclose. So you may get a subpoena or something, or you may have to, in terms of certain statutory information, you have to disclose certain things, or you have a professional duty or right to disclose. And that's what section 260 and 360 of the code do. I'm just going back on my slides again, is that if you're in public practice in terms of section 360, you have a professional duty to disclose non-compliance with laws and regulations under certain circumstances. And the same with a professional accountant in business, and depends on what type of action your client is taking. So the NONCLAR response provides a framework where there's a focused or desired response to achieve an outcome. One also needs to make sure that people follow a consistent approach, and therefore the framework that deals with NONCLAR has been set up to make sure that professional accountants don't turn a blind eye to the matter, and that there's a timely response. And I've changed that wording now. Here it says, and respond timely. We're saying there's a timely response. That can be by you or the client. And we'll discuss that in due course. And the NONCLAR consequences are addressed. This will prevent or deter NONCLAR from happening, and that appropriate action, where necessary, is taken. Right. We've just gone 10 past, nearly 10 past, so we're going to go till 20 past 3 with a break, and then please, at 20 past on the dot, I'm going to be starting. Otherwise, we're not going to be finishing. We've still got quite a bit to go through. So please, if I can ask you to be back in, on my watch, it's 11 minutes, but synchronize your watches 10 and a half minutes from now. Thanks a lot. We'll see you shortly. Stan or Danny, if you're there, I'm just going to try and shut down my machine and try and restart it and see if that fixes the camera problem. So don't worry, I'm just logging off and we'll switch on before the time's up. Thanks.
Thanks, Linus. No? You're back on, Edwin, but you're still muted though, but we can see you now. So we just need your screen again and then we can carry on.
Right. Give me 1 minute, but at least we solved the problem. Don't know why, but okay, I'm just going to share this presentation. Give me 1 moment. I'm just getting to the right slide. Right, and share the screen and we'll be up and running. Right, can you see that?
We can see it. So we all ready to go again?
Super. Great. Okay, so thanks everybody. Give me 1 second. You know, it's a new thing now. When you're online and you cough, not only do you have to put your hand in front of your mouth, but you also need to mute. It's called IT etiquette. So apologies for that. Right. So let's have a look now at the approach that needs to be followed for a NONCLAR response. So there's a 6-step process that needs to be followed. The first is we need to understand whether or not we're in the scope, and that's whether or not there is a NONCLAR. Once we've done that, then what we need to do is understand or identify the matter and obtain an understanding whether or not it's meeting the definition of NONCLAR. And that's steps 1 and 2. So identify the matter and then obtain an understanding. Then we need to get further information about it, then determine whether further action is required, and then determining what type of further action. And then there's the question on documentation. So let's now move on to the next phase. And that is that what I'm going to do is, because most of you are in public practice, I'm going to adapt these slides that you've got and talk to it as if you're in public practice, which has more onerous requirements than if you are in a professional accountant in business. So the first thing that we need to do is identify whether or not we have a non-compliance and obtain an understanding. But what does that involve? So that involves applying your professional knowledge and judgment and your expertise to consider the nature of the act. So, is there a law? Has that law been breached? The Companies Act says financial statements need to be prepared within 6 months. Has that happened? Yes or no? Is an entity trying to prepare a tax return and are they not complying with the Income Tax Act? Are they including amounts which you know are not deductible? What are the circumstances in which that has occurred? Is that at management level? Was there a financial manager that was unscrupulous and didn't do what he was supposed to? And then what are the potential consequences of these actions for the entity? You know, an entity that's deducting VAT, which it shouldn't, well, you know, clearly that's in breach of the law. What are the consequences? Well, there's penalties, there's interest. The Companies Act, we said, if a person hasn't complied with the financial statements, well, what are the implications for the entity? I know SIP-C has actually given people that have reported an entity that has not prepared their financial statements within 6 months, they actually issue them with a compliance notice saying, we are aware that in terms of whatever section, I can't remember if it's 29 or 30 of the Companies Act, you are required to issue your financial statements within 6 months. You haven't done so. Please ensure that you do. Now, let's first understand that you don't need to report. Reporting is the last resort. And there can be the actions of management can lead to a situation where you do not need to report. Once you've obtained an understanding, the next step is look at, well, let's discuss the matter with the client. So let's stick with that example. The client hasn't prepared their financial statements, or if there's one you'd like to discuss or propose, I'm happy to do that. Those of you that are dealing with a current NONCLAR, there were some of you that responded. If you give me the topic, I'm happy to play that through this exercise if you'd like. If you'd like to, I'll just wait a second or two, a minute or so, just to see if there's anything that comes in on the chat. Or the Q&A, I'm not sure what would be easier. Okay, can't see anything coming through. Stan or Danny, if you see something, just let me know. Let's then just go talk through my example then. So you need to discuss the matter. And now, if you're a professional accountant in business, you would need to discuss it with your immediate superior or a higher level of management than you believe would be involved. If you're a professional accountant in public practice, you would need to discuss that with a client, probably one of the directors, which is probably the person you'd be dealing with most times. And the objective is to clarify your understanding. Have the financial statements not been prepared, or are there tax returns outstanding, or, you know, is there any non-compliance that the entity has done? And then understand then what steps could be taken. Maybe management aren't aware, so they would need to investigate that further. Maybe there's a difference in interpretation of the act. You know, maybe it's an entity's declared a dividend, a distribution, and they didn't do the solvency and liquidity test. You know, maybe they didn't think it was necessary. Can that be rectified? Is there a way in which the entity can comply with the law and regulation? The objective is to rectify, remediate, or mitigate any of the consequences for non-compliance. One also is concerned about if the entity hasn't submitted a tax return or a VAT return or PAYE return, well, maybe they've only done it once. They can submit that, but we need to make sure that there's processes in place that it doesn't happen again. If something has not yet occurred, well, is there something that can be done to prevent it from occurring? And then consider whether or not there's any communication that would need to take place. Now, depending on what you establish will then determine the next step that needs to be followed. And that is determining whether further action is required. So let's say you come to the client, you just do their taxes, you contact them, they say, yeah, contact us in another month, it'll all be done. You come there, you submit the tax return, and when submitting the tax return, you see that the financial statements which are attached to the tax return were only prepared on the 15th of September, but the year end was February. They should have done it by the 31st of August. Well, then, even though there was no CLAR, that has subsequently been rectified by the time you're aware of it, and therefore you wouldn't even need to do anything in that regard. So let's then understand what other courses of action may be appropriate. So the first is, well, let's say you come...
Edwin, before you carry on with it, did you see the question? There's a question.
Sorry, no, I did not. Thank you. What about compliance in regards to VAT invoices? Paid by one company and recorded in another company and used by the recorded company. So I'm going to try and answer that. You may need to just ask an additional question there anonymously, because I'm not sure if this is, I'm fully understanding. So if I understand it correctly, so you've got company A. Company A is a VAT registered company, and company B is not a VAT registered company, and company A claims the VAT inputs in its VAT return on the invoices made out to company B. I don't know what it means by used. Okay, both are registered, but okay, fine. But is the one claiming the VAT input for an invoice which is not in its name, it's in the name of the other entity? Is that correct? If you can just respond to me on there. Thanks for the clarity that they both VAT registered. And then I'll continue. I'm just waiting for your response. Have I got the understanding correctly? And then I'm happy to continue. It's coming up as anonymous, so I don't know who's asking what, but I just want to clarify the fact correct. While we're waiting, I'll just continue, and then we'll get back to this. So the first question is, okay, this is an asset class VAT issue. So I assume I'm not sure what asset class, but I assume what you're saying is there's assets bought in one company, but the VAT's being claimed in the other company, and the VAT invoice is not in that company's name, it's in the other company's name. So, fine, let's discuss this. So, first of all, so is this non-compliance? I think we would all agree you can only claim VAT if you have a valid VAT invoice, a tax invoice. And therefore, if the entity is not in the entity claiming the VAT is not, what's the word, doesn't have a valid VAT invoice, well, then clearly it would not be compliance with the Act. I mean, what's interesting is I've seen in practice what can actually happen is they can, if SARS had to find out about this, they could raise interest and penalties in the company that's claimed it. And then they would need to resubmit the VAT returns for the company that didn't. So, you know, and if these are assets, this would likely to be material amounts. So, yeah, I think we definitely in NONCLAR over here. You know, it would be interesting to see why. I mean, I know some people try and another maybe a VAT issue that I've heard discussed is, well, sometimes the reason why companies do this is because they don't want to refund in the one company. So therefore, they put it in the company where it has more, VAT output, and therefore, you know, they can get a refund. The problem with that is it's not a VAT input to that entity. I've also seen situations where, let's just say, they've got 50,000 Rand worth of VAT input on a big invoice, that they'll smooth it over 5 months. Now, that's an interesting one. I'm not a VAT expert. I'm not a tax expert. But if they keep a record, you know, you're allowed to claim under correction. I'm sure those of you that are on the call that are tax practitioners can advise me on this. But somebody once mentioned to me that, you know, you've got, I don't know how many months it is to claim a VAT input. So if I decide I've got a VAT input and I only claim 10,000 a month over 5 months, I'm not sure that that would be a problem. But I'll defer to your greater knowledge. But here, where you've got a VAT input in the name of one company, so VAT input in the name of one company, and another company in the same group is claiming it, I don't believe it's legal, and I do believe you have a note. So then the question is, well, what now, if you bring this to management's attention, what are they going to do about it? If they say, leave us alone, you have to then see whether or not the next step would apply. If, however, they say, well, okay, fine, we hear what you're saying. We're going to amend our VAT returns. Fine. Or they say, well, look, we don't want to cause problems. We're not going to amend it. We are going to make an adjustment in the next VAT return. Well, then you'd need to assess whether or not that's appropriate or not. If they say, well, we'll do it when we get a big sale in 6 months' time, I'm not sure we've got a timeous response. Also, you know, are management going to do anything about it or not would determine your response that you need to then perform. Let's say they've told you that this is what they want to do. They want to submit a VAT return where they're going to claim the VAT of the other company. You can stop them in time. That's great. If you can't, well, then you need to consider now, depending on management's response, what action you need to take. And disclosure to an appropriate authority may be one of those courses of action. Let's go through that now in terms of, look, in terms of time, I don't think I need to address this. We're not dealing with pervasive, etc. We've spoken about, I don't think we're dealing with harm to the public. So this is a separate issue because there's a duty to report immediately. But we've said now, discuss whether further action is required. So clearly, they've done something wrong in your circumstances. So what then the further action? So once again, if management decide that they're going to correct it, and you believe their response is timeous, then you would get to a situation where there's no further action required, because management are going to correct the situation. If, however, and I'm just talking to the facts and circumstances, if, however, the situation is that management say we'll fix it up in 6 months' time, there's penalties and interest and other things that could arise. I don't believe that would be adequate. If they say they'll fix it up in the next return, well, then my question would be is, well, how long have they been doing this and what is the impact and what is the potential penalties? And then you would need to evaluate, I'm going back a couple of slides, you would need to evaluate whether or not that is a timeous response. And remember, it's not timeous because, well, you've established it 6 months after it's happened and they're doing it now. It's timeous in terms of when the act took place. I hope I'm making sense. And you need to evaluate that on what a reasonable and informed third party would consider. And this is where you sometimes need to engage or consult with your colleagues or a third party as to whether or not, because you may have a bias to try and resolve the issue so that you don't need to deal with it. So, sorry, I'm just going. So, and then if, however, they continue with this course of action, well, assume you're dealing with management and there's nowhere higher to go, you would probably then have to consider taking further action. And what would that further action be? It could be resignation from that client, somebody you don't want to deal with anymore. Or if it persists, you may need to consider disclosure to the appropriate authority. Now, the question is who that authority would be. That would depend totally on the role in which you act. So if you're picking this up as their tax consultant or bookkeeper or something, well, then your appropriate authority under these circumstances would be SARS, the South African Revenue Services. And my understanding is SAICA put out a guideline on NONCLAR and what email address, etc., you would need to make the disclosure to. If, for example, you're an auditor and you've picked this up in terms of your audit, well, you would then have a responsibility to disclose that to the RBA, and they would then have a responsibility to evaluate and determine what they're going to do. And the chances are, and I've heard of many situations with NONCLARs or reportable irregularities, where they've then passed it on to SIPC, to SIPC or to what's the other entity, to SARS along these circumstances. Another example is if you're the preparer of a set of financial statements. I've had a situation where I heard where the entity was part of a group and directors' emoluments were not disclosed, or they were disclosed but very summarized, And the auditor, I don't know if it was the auditor or who reported them, but what came through from Selbst is that they gave them a notice of compliance to say, that you've breached section whatever of the Act, regulation whatever of the Act, and, please advise what you're going to do, otherwise they'll take further action. So I've seen Selbst, I'm aware of SARS, I'm aware of the FRSC, the Fidelity Fund for attorney trust accounts, the Legal Practitioners Fidelity Fund. So, depending on the facts and circumstances and what role you play, there would definitely be, if management are not going to do anything, there would then be a need to possibly disclose that to a third party. I don't know if there's any further follow-up questions or if I can continue with the slide, but I hope that's answered your question, the one that you're currently dealing with. Okay. If you're employed by somebody, so then if you're in senior level of management, then you need to try and do the work that would be to investigate, to see, what's happening, and to consider whether or not you would have to disclose to an appropriate authority. Whereas if you a practitioner and you're in public practice, you have a much more onerous responsibility in this regard. Right. Then the next aspect is, well, if we've discussed the matter, we've determined the further action. So now, what about documentation? And if you are a professional accountant in business, you are encouraged to disclose, to keep documentation. If you are a professional accountant in public practice, you are mandated by the code to keep proper documentation. This is encouraged is only where it is a professional accountant in business. In your scenario where you're consulting to a client, you're in public practice, you would have to document what the matter is, like you've described in terms of the VAT, that they were claiming a deduction in company B. It's interesting, the company that's got the VAT invoice, they've done nothing wrong. The company that's claiming the VAT input where it's not in their name, that's the issue, obviously. You would have to document the results of discussions with the client, because that's a requirement in terms of one of the steps that you have to follow. What did they advise? What they're going to do about it? What courses of actions you considered? What did they consider? What did you propose? The judgment you made, well, this is non-compliance. What are they going to do if they then decide that they're going to amend their VAT returns and face an audit or whatever? That's well and good. If they say they're not going to do anything, well, then you would need to consider your further actions in terms of disclosure to the authority, and that could be SARS. Remember, this is the process you need to follow. This is the process that needs to be documented in sufficient detail to allow a reasonable, informed third party to see how you've exercised your professional judgment and how you've dealt with any ethical threats and how they've been resolved. In terms of the other professional accountants in business, so if you, I'm just going to go back a couple of slides. Give me a sec. I'm just going to go back to the correct slide. So we started off speaking about professional accountants in business, and what we were dealing with was a senior professional accountant. And even though they have responsibilities to investigate, etc., they are not the same as a professional accountant in public practice. You then have a professional accountant with even less responsibility, and that is a other professional accountant. And that would be somebody like, I don't know, a debtors clerk, a financial manager in a big organization where there's an FD to whom they report, and they really don't have much authority to bring about a change in the non-compliance, if that makes sense. And those people, they would need to obtain an understanding, try and substantiate or dispel their concerns. If they do believe there is a NONCLAR, they would need to inform their immediate supervisor. And unless you're dealing with these exceptional circumstances where it's going to have a substantial harm to stakeholders, then they could stop there. So we've got, about 10 minutes left, which I'm glad we discussed the pressing issue, which was very much a, how can I word it, a real life case study that I think we dealt with. In the 9 minutes that are left, I don't think I'm going to go on the, or maybe I'll just speak about this in terms of professional accountants in business or in public practice. There is something called the Protection of Disclosures Act, which protects a person from criminal liability, or provided that they followed the code. For an employer-employee relationship, there's the Protection of Disclosures Act allows protection provided they have followed the requirements of the internal processes, they acted in good faith, and the disclosure was first made internally and then to an appropriate authority. For professional accountant in public practice, we've discussed what your responsibilities are. It's important that you have policies and procedures that you follow in this regard. And interestingly, in all your engagement letters, there should be a standard clause that deals with non-compliance with laws and regulations, advising your client that if you establish something, you have a responsibility to act in terms of the code of professional conduct. There should also be, if you're in a larger practice, you should, your staff should be advised and trained on this as to how they need to behave. And then also, you should also consider, if you've got staff, employees, or subcontractors, this should be standard wording in your employment contracts, subcontractors, that if there is anything in this regard that, the principles, the requirements of the code will be put in force. We've got about 6 minutes left, which is not enough time to go through any of the case studies. But like I said, I think we had a real live one. So thank you for sharing that information anonymously as to what you were currently dealing with. I think in the 5 minutes that are left, I think I'm happy to take questions, or you can have another 5 minutes back in your busy schedules. So I'll wait to hear from, if there's any questions, I'll see. Otherwise, thanks. At least you got to see me for the last 55 minutes. And yeah, hope you enjoyed the session. Thanks, Stan.
Yeah, no, thank you. If there are any questions, now's the time. If you do have questions you want to take offline, just send them to Danny, and he'll pass them on to Edwin in the if they're appropriate, or try and answer whatever can be answered. I don't know if there are any questions. Anybody got any questions? Raise your hand, put it in the Q&A. In the interim, Edwin, I have to say that you're nothing if not thorough. So I don't know if there would be any questions. You've covered the ground. And I do believe that the message would get through. So thank you for your time. Thank you for your preparation, which is always impeccable. And thank you to everyone for joining us. Next month, we have Professor Jackie Aronser on the 19th of June.
We got one after you finish telling about Jackie. Edwin, there is one question.
Okay. So yeah, just before the question, just to wrap up, your certificates will be on their way in the next day or so. And Edwin, if you'd like to just answer the question.
Edwin, did you see the question? Sorry.
Sorry, I was on mute. Yeah, I've got it. So the question is, being in a small business, a small public practice client firm, how do you feel about NONCLAR issues resolved with the client before publishing the AFS? So Warren, if I can just ask, I'm going to answer what I think I understand. So I'm not sure if we're speaking about the financial statements not having been done, and then you coming in and they say, listen, we know it's not in terms of the Act, it hasn't been done. We're in the process of doing it, we're going to issue it imminently. That's fine, provided that imminently is in the next couple of weeks or days, but it's not, well, we're 6 months down the line, what's the difference if it's another 6 months? If that's what you're saying, and that's what NONCLAR, the code is requiring. It's requiring people to act and rectify the non-compliance. If the non-compliance is then rectified, you do not need to disclose to SIPC or to SARS if it's tax related. So it's, however, that needs to be part of that is it needs to be timeous. And therefore, if they say, well, I'm actually going overseas now, it's 6 months late, I'm going to leave it for another 6 months, and we'll get to it next year, I don't think that's timeous. And therefore, under those circumstances, you may have a need. But if they're doing it imminently, you come there, you say, well, look, haven't done it, we're going to deal with it, we're addressing it. Great. I would still just document why you didn't do anything about it for your own record keeping purposes, because we said for a professional accountant in public practice, you have a responsibility to document this. It's mandatory, but that's documentation just so you've shown that you applied your mind and you complied with the code, but you would have and you could document there why they did it. You came there, they hadn't done it. They said they'll do it in the next 2 months, or 2 weeks. You came there, you drafted the financial statements, you did it, it was done. No need to report. Perfectly okay. Okay.
Any other questions? Okay, as I said, thank you very much. Thanks for your time and your effort. And as far as this is concerned, we have a next month Professor Jackie Aronser on the mid-year update. And if you have any questions, send them on to Danny. As I said, your certificates will be on their way to you. And thanks for your attendance, and enjoy the rest of the afternoon. I don't know, Danny, if you've got anything further to say?
No questions from me, comments from me. Okay. I hope everyone enjoyed, and we'll see you in a month's time.
Yeah. Thanks, Dan. Thanks, Edwin, and good night, everybody. Bye.
Cheers. Thanks, everybody.
Closing down.